Hello and welcome back to the channel. Today we're talking about 5 things that you should know for RRSP season. Let's get into it. First and foremost, you should know what tax bracket you're in. Every province has multiple tax brackets. The federal government has multiple tax brackets. What I'm going to show on the screen here is the Ontario combined tax rate. So it's province and federal. And for the rest of this conversation, I'm going to have an example of making $90,000 in Ontario. So if you're in Ontario making 90 grand, you can see your marginal tax rate is 31.48%. So that actually leads me to my next point. Number 2, you should know the difference between marginal and average tax rate. Marginal tax rate is the tax rate you pay on your top dollar of earnings. So in this example, on the 90,000th dollar that this person earns, they pay 31.48% in tax. The average tax rate combines all the brackets below and creates an average. And in this case, a $90,000 income in Ontario, your average tax rate will be 21.9%. Why is this important? It's because this is where your tax return starts to get calculated, which we'll get to later. Number 3, you should know when the RSP deadline is. So you've already earned your income for 2021, that's done. And all throughout, you may or may not have been contributing to RSPs, and that's fine. But you should know that for the first 60 days of any year, you can contribute into an RRSP and it'll apply to the previous year. So 60 days into 2022 is March 1st of 2022. So that's the deadline. It's also important to note that it doesn't mean your money has to be invested. It just has to be in an RRSP. You have to put new money into an RRSP. It can be sitting in cash if you are scared of the markets at the time, whatever this scenario is. But as long as it's in the RRSP, it should generate. As long as it's in the RRSP, it'll generate an RRSP receipt, and you can put that against your taxes. Number 4, you should know how an RRSP actually works. In the year that you're contributing to an RRSP, so for 2021, every dollar that you put in reduces your earned income for that year. So again, back to that example of the $90,000 income earner in Ontario. If that person put $100 into an RRSP, they would generate a 31.48% refund, or more accurately, reduction in their tax bill of 31.48% or $31.48. What people forget all the time is that you still have to pay taxes on that money when you take it out in retirement. So if you are in a low tax bracket, or if you are in any tax bracket, but you have long-term, you have expectations of your income increasing significantly, the RRSP may not be a good fit for you. It might not, because you can get a better return later, or you might just be getting a very, very small return now, whatever it is. Kent and I will be doing an RRSP versus TFSA video in the near future where we're going to dive further into that. But in the meantime, feel free to email us if you have any questions. Number 5, you should know about RRSP loans. Now, these are not for everybody, but for some people, they make a lot of sense. An RRSP loan is a short-term loan from a financial institution with the intention of you investing it in an RRSP, generating a large return, and paying that loan back, usually in 1 or 2 years, depending on the institution. They can be super, super effective of accelerating your RRSP. Now, here's a completely hypothetical situation. I didn't actually run specific numbers. This is just to show how this works. But if you want me to run these numbers for you, I'm happy to take a look. If you are already expecting a return, and for the sake of example, let's say that's going to be a $3,000 return, you may want to look at getting an RSP loan for, let's say, $5,000. That $5,000 loan goes into your RSP, generates a larger return, and now you get a return of $5,000 as opposed to $3,000, and you just pay off the loan. If you compare those two situations, if you don't do the loan, you get a $3,000 return. Your net worth increases by $3,000. That's great. Nothing's wrong with that at all. In scenario B, you take out a $5,000 loan, you invest that $5,000 into your RSP, you get a $5,000 refund, you pay the loan off. Your net worth has gone up by $5,000. It's 2/3 more for your long-term future that's now invested. You've manufactured money out of nowhere. Now, RSP loans are usually very quick to be approved and money into your pocket. If you've seen my other videos where I talk about the Manulife One, you can just write this $5,000 check and get it done immediately. Again, it's one of those things where if you can control the Manulife One, it's fantastic when it comes to RSP season. It's something that I've done in the past and I've had clients do in the past as well. So those were my 5 key things to know for RSP season. I hope you learned something new. My email will be down below in the description and on the screen now. Please do the normal YouTube things. Give us a thumbs up. Subscribe to the channel. We hope to see you next time. Until next time, take care.